Good morning and welcome to Coffee and Real Estate Scoop with Stacy. I'm Stacy Martin with Keller Williams Realty and the Martin DreamToHOME Team. And today we have a special guest, Bill Horan with Realty Exchange Corp. Bill, thanks so much for joining us.
Good morning.
Good morning. Tell us a little bit about you and your wonderful business that you've been running for quite some time now.
A little bit about me. I guess I've been doing this my dad started our business in 1990. So this year we turned 30 years. And so I'm second generation. I've been doing about 18 years now. And my son has been working with me here this last year, but he just headed off to law school. So virtual law school, whatever that means, right? So he was coming in as third generation. We'll see after law school, what his head is like, but it's kind of fascinating that we've had this little business for so long. It's a very niche-y business, right? It's a unique kind of a business.
Right. So tell us about your business and what it is.
So we are a qualified intermediary. And so this is in reference to 1031 exchanges, and we are a creation of the tax code. So the government created our role to be a middleman to bridge investors from one investment to another. Because fundamentally, when you do an exchange, you're trading one property for another. And most exchange transactions have a delay. You give up property to one party, and then you end up getting replacement property from another. And our role is, like I said, created by the government, that when somebody gives up their ownership, everything comes through us. It passes through us. And so they're not getting anything. They're not gaining anything when they give up their property. Because if they settle, close, take the money, that's a sale by definition. So in the middle of the exchange, everything passes through me, and then I take their money and buy what they tell me to buy. And then just in the end, the end result is they had real estate. They didn't get anything in the middle, so they're not gaining anything. And then they still own real estate when it's all said and done. So that's the basic premise.
Okay. So tell us a little bit about like kind and how it works.
Sure. So in the last tax reform, so that was about 3 years or so ago, like kind now means, by definition, it's real estate for real estate. So we used to do personal property exchanges, boats and trucks and buses, but that's gone. So 1031 taxes today is only real estate.
Okay.
And what like kind means is held for business investment. So like rental, residential, apartment buildings, commercial, land, raw land, all of that is considered business investment property. So on both ends. So just think of it as I'm moving my rental property to another property, but I want to change it to commercial type property and rent it out. I'm in the rental business. I'm moving my business someplace else. What it is not is it's not primary residence. That's personal use homes, or second homes. That doesn't count either. Those are personal use homes, and the government doesn't treat that as a business property, investment property.
Right.
And it doesn't fit flipping property or dealer property, development property, because that's held for resale. That's just regular income type property, right? You're in the business of buying and selling real estate. That's just income. So that does not fit this definition either.
Okay.
So think of it as the buy and hold owners, and then they're just moving their investments someplace else and continuing to be in the buy and hold business.
Okay. All right. Super. Now let's say somebody comes to us and they have a property that they are going to sell and it has been a rental. What would we need to do? Get them in touch with you.
Right. So we get started when there's a contract to sell. So typically there's a contract to sell, and it takes the buyer 30, 45 days to go through their due diligence, get their money, all that sort of stuff. So we get hired in that window between contract signing and actual settlement. It is critical that we are hired before closing, because if the client settles and gives up ownership of the property themselves, that's a sale by definition. And I hate that phone call, hey, I want to do an exchange, but I closed last Friday, and I can't help somebody swap something they don't own.
Right.
It doesn't work, right?
Too late, right?
Too late, yeah. And I can't go backwards, right? You can't just sort of fix it. It doesn't work that way.
Right. So how much would someone have to reinvest?
Yeah, good question. So the whole idea behind exchange is you own an asset, real estate asset at a certain value. Let me just use an example of 500 grand. I own something worth 500. Let's say it cost me 40 grand to get out. Commission, transfer taxes, right? There's some cost to sell.
Mm-hmm.
That puts me down to 460. So to not pay tax, I've got to reinvest that 460 worth of real estate because
Right.
that's what I own after my cost to get out. So
Mm-hmm.
when I say not pay tax, that's you're replacing this full investment, right? The
Mm-hmm. Mm-hmm.
second piece to this is at closing, if there's a mortgage there, that debt will get paid off and you're left with the cash, the proceeds.
Mm-hmm.
So the second piece is that the cash all has to be reinvested as well.
Mm-hmm.
So just from a basic premise, if I own something worth $500,000, I'm going to adjust for my cost to get out. So I'm down to 460 or so, and I've got a couple of hundred of cash. If I go buy again at 460 and I put all that money back in, nothing changed for me financially. I still own 460 worth of real estate, and all the money is reinvested. I
Right.
just have a different address.
Right. Right.
It's not an all or nothing. So if I
Mm-hmm.
use the example, you sell at 460 and I find a wonderful investment at 450. Oh, that's a good one. That's the one I want. You're only going to pay tax on that difference because you gave up 460 and now you own 450 worth of real estate. Where did the money go? The money left the deal somewhere.
Right.
And you'll pay tax on that difference up to your gain amount. So
Right.
when we get involved in clients that want to go down in value, they don't want to buy as much real estate. We call that a partial exchange. Some of it is taxable, some of it's deferred. So we drill down a little bit farther as to the feasibility of doing exchanges. Yeah, I get in calls with clients. Well, I own a $500,000 property, but I only want to buy a $200,000 property. So they're talking about going from 500 to 200. That's a huge gap. Do
Right.
they even have 300 of profit in the property? So we end up in those discussions. How much profit is there actually in there? And the right word to use is gain.
Right.
Oh, the sun's coming out now.
And Bill, they normally get help from their CPA to determine their book value, right?
Absolutely.
Right.
Yeah, absolutely. Got no basis, right?
A
Book
lot of
value is the right
people
word to
think
use, right?
that this is sales price, and it's not. It's what your book value is based on where you are in that point of life. Correct.
Absolutely right. So when you buy a piece of real estate, you have a starting basis. There's a cost there. You put money into the thing. And then basis adjusts every year. You put a new kitchen in. Well, you invested more money in your property, your basis goes up. And then as a rental property, you take a deduction every year for depreciation. So then you're writing off your basis because you're getting a deduction. So every year it adjusts, goes up for new dollars invested, down for depreciation. So when it comes time to sell, there's an adjusted basis somewhere.
Right.
And it's that gap between adjusted basis and what you sell for is your gain.
What if you need to do more than one property? Let's say you want to buy two properties.
So the premise of exchanging is it's real estate for real estate. So it could be multiple properties that you sell, it's that value of real estate, and it can be multiple properties that you buy to replace that real estate.
Mm-hmm. Okay. Timing's the key.
Great question, right? So you got to remember the basic premise. You know, you're selling something, and the government says, "Wait a minute, we're going to collect tax, but if you want to move your investment someplace else, we'll let you do that. You got to do it in a certain window of time."
Mm-hmm.
And so you have 180 days from closing of your property, the one you're selling, to owning the new property. All right. So that's the basic window of time to get an exchange done.
Mm-hmm.
The hard part of an exchange is you have to identify in the first 45 days. That's the hard part. So what does that mean? Let me just paint a scenario. Somebody closes, money comes to escrow, clock is ticking. We get to the 45th day. Me as the QI needs to know what to buy. You're going to give me a list of properties, your choices. If the client does not give me a list, I'm going to stop because I don't know what to buy. And I'm going to return their cash. If they do give me a list, right, then that's what I'm going to use their money to buy is from that list all the way through 180 days. So timing is 180 days to give up ownership and own new. And the critical part is you got to identify to me what your choices are at that 45th day. That's the hard part of an exchange. No ifs, ands, or buts about it.
Right. So what if they want to do this, but they're worried about paperwork and red tape? What does it take to fill out the paperwork with you, and how much does it cost to have your service?
Right. So we start when there's a contract to sell. So I get that contract, pick up the details, and create an exchange agreement. So that's my agreement with the client. They're hiring me to be the qualified intermediary. I'm doing everything with DocuSign nowadays. It almost seems like 80% of my transactions are done with DocuSign. So it happens very quickly.
Mm-hmm.
And then as part of what I'm going to do is send settlement instructions to the title company. Hey, this is now an exchange. I've been hired. Send me the money. So that part on the exchange part isn't that difficult, right? Because it's a normal sales and settlement process, and I'm adding a layer to it that I think is kind of painless. We try to make it as painless as possible.
Mm-hmm.
Right. We get to the 45th day, I'm communicating with the client. What do you want me to buy with your money? So they give me this identification step list, right? And then there's a contract to purchase. So they go get a contract to purchase, just like any contract, right? I need to become party to that. I'm assigned into the contract. Mechanically, that's how I step into the transaction that they negotiated.
Mm-hmm.
So I step in, send the money to closing, and we're done.
Great. Do you have to use any special closing company?
No, it's a normal sales and settlement process. So the clients pick all of that, and then we just interface with them.
Okay. Do you work outside of the state?
This is federal, so I have exchanges happening all over the country. So you can exchange anywhere in the U.S.
Mm-hmm.
And the territories, except for Puerto Rico, because Puerto Rico has its own tax system. So they're excluded. But I've done exchanges in Guam, U.S. Virgin Islands. It's kind of fascinating. It's the same process, no matter where.
We need to pursue one of those, Stacy, in the U.S.
Yeah. I just finished one in the U.S. Virgin Islands. And I happened to visit there, and I
St.
got my
John.
eyeballs on it. It was really kind of cool.
Oh, so you did one personally?
No, it was for a client. He sold. He sold in the Key West.
I see.
And then he moved the money into the U.S. Virgin Islands, right?
Nice.
Yeah.
Good. So what are the common hiccups and things people need to be prepared for, just to help our folks that maybe view this, and we share it with for, years to come, potentially, until anything changes with how the system works. But using this as an educational tool so people understand.
Planning. You have to plan this stuff out. It comes with a clock. I think sometimes, the government understands you could move your investment someplace else, but you got to work within this box, because otherwise the government wants your money. It's just the basic framework. Hey, we'll just as soon collect your income tax, right? But they'll let you move if you play within the rules. In today's market, right? The market is nuts. If you don't plan and know where you want to go ahead of time, it will fail. Mm-hmm. The clients that are successful start hunting for property early, start narrowing down what they want, what state they're in, what kind of property, neighborhoods, all that sort of stuff. And they're even trying to contract for the new property, the replacement, even before they've closed on theirs. And that's easy for me to say. It's hard to accomplish, right? But the ones that I see that are really successful already have the new one under contract and headed for closing. They're doing their due diligence. Mm-hmm. The hard part with an exchange is we get to that 45th day. They give me this list. It can't change after the 45th day. So if they give me a list on day 45, they can't call me on day 60 and say, Bill, I hate all my properties. I want a different one. I'm stuck. I mean, the law.
Or someone else outbid me and I can't get those three.
And we took that to the government and said, hey, this is crazy. In the last go-go days, right, when it was super nuts way back when, before the crash, we took that that same question to the government. And the government's answer was, well, it's on the list. Offer more money and you'll get it. We don't care what the issue is. You're choosing not to buy it because you don't like the deal, but you put it on your list. Mm-hmm. So there's no sympathy at the IRS level. So
none of the dates have been extended?
We've already passed that as of this date. So we did have an extension into July 15th for all of our exchanges, but we're past that now. I do know from working in the industry that Treasury was aware that we were screaming and yelling for more relief, And somebody at the top of Treasury has decided not to do anything else.
Right.
So we were expecting another relief extension, but it is not coming.
Right.
Odds would be really bad unless somebody changes.
How many cases are you doing a week?
We track it on a monthly basis.
Okay.
So, you know, I'm an independent QI, so this is all we do. I think normally I'm running about 90 a month. This month it's crazy, so we crossed over 130 open exchanges this last month.
Wow.
So we're pretty busy. Yeah.
I know we've used you twice, actually.
Okay.
And I would imagine that you get repeat users
Yes.
in this business like we are.
Yeah, because nobody wants to pay tax, right? So even if you exchange into the new one, the gain is there in the new property. And then it comes time to sell again, you know, the opportunity is there. Well, I still don't want to pay tax, so you do it again. One of the fascinating statistics, you know, because I'm part of a lobbying team that lobbies on Capitol Hill, and you know, because we're trying to protect 1031 in the tax code, because some of the attitude on the Hill is rich people not paying taxes. Why should we let them do that, right? So we're always arguing against that, meaning, you know, these are investors just moving their investments someplace else. They still owe the tax. It's not going away. It's just, it's a timing thing. And we always used to get hit in the head that, wait a minute, people never pay tax. Right, they take it to the grave, and the term that we hear in the business is swap till you drop. Right, the reality is we had a couple of economic studies done. One, a micro study by a couple of professors that was set up by the Real Estate Roundtable, and what they studied all the CoStar data. So they had the commercial database of all these transactions that were 1031 exchanges, and what they found was the commercial transactions, over 80% of them ended up in a taxable sale. So the exchange reality, at least on the commercial end, and I have to believe it translates to the residential end as well. The fundamental reality is it's a timing thing. It's either pay me now or pay me later. So when somebody wants to exchange, they're just making the decision that they still want to be invested in real estate, just don't want to pay the tax at that moment in time and cash out.
And
so,
Bill, I imagine you feel this way as well. I was talking to some acquaintances the other day about the trickle down value of 1031 exchanges. So obviously it helps Stacy and I with another arrow in our quiver on how to advise our clients, but also municipalities benefit from the transactions themselves through grantors and grantees taxes.
All of that.
I mean, settlement houses, right? So there's a value to commerce happening in real estate in general, up and down the federal system.
And that is our messaging on Capitol Hill. This is part of the churn of the economy, right? Because every time a real estate transaction happens, there's like 30 jobs that are attributed to that. The plumber, the title guy, the insurance guy, everybody ripples through those transactions. And with an exchange, there's multiple transactions. And so if you take it out of the code, we already know it impacts GDP if you take it out of the code, because that was part of a study that was done by Ernst & Young by us. We commissioned it. That has a ripple effect, and we call it the lock-in effect, meaning if somebody owns something and then they have a tax bill, if they sell, they don't sell, they lock up. And so that means that asset just sits there. It doesn't get the highest and best use. Somebody new coming in is going to invest in it and put money in and change its purpose. So it's all part of the economy. Just so as an FYI, at this moment in time, we are having both the micro study and the macro study updated. So we are anticipating, obviously, the election is coming. Who knows what's going to happen? But we've already commissioned both those studies to be updated since tax reform. Because 1031 changed with losing personal property. It's all real estate. So now it's being updated. It's in the works now.
Okay.
Excellent.
You would ask me the question cost. Yeah. So just a general cost is what we charge. Every QI is a little bit different. Okay. We charge $750 to exchange one property for another.
Okay.
And so if you're just swapping one for one, it's a flat fee of $750. If somebody is adding more closings to the process, so like they sell one and want to buy two, I'm going to add another $300 because I'm going to go through another closing, another contract, settlement, the whole shoot match.
Right.
So the cost to do an exchange is not that high. I mean, it's a pretty, my part is pretty straightforward, right? The hard part is selling and buying.
Okay. Thank you so much. Are there any other common questions that people typically ask that you wanted to address today to get it out there to people?
Yeah, there's we had started on that conversation where how much do you have to buy? There is a very bad misconception out there because they read things on the internet that you only have to reinvest the proceeds or reinvest the profit. And that's not what this is.
Mhm.
So it's about replacing the value of that real estate, the whole thing.
Full value.
Right. To not pay tax. That's
Right.
the framework. If you don't, you're going to pay some taxes. And so that's probably the biggest obstacle that I run into all the time, and how hard the 45-day is, right? So, and that goes back to that planning word I use. You got to really plan this stuff out. I can tell you, if you want to buy something in probably West Virginia or Idaho or something, people will wait for you, right? But in our market here, if you don't have your act together, you're going to get outbid in a heartbeat.
Mm-hmm. Absolutely. I see it every day. I'm living it.
Yeah. And I hear it every day.
Yeah.
So, Bill, you talked briefly about the scenario where savvy investors will identify their target property first.
Right.
And are there ever situations where they'll go ahead and close on that property and then sell their property, their source property afterwards?
Yeah, that's called a reverse exchange, and it's not as easy as it sounds. So the law is sell first and then later buy. That's the way the deferred delayed exchange law is written. Okay. And it's not uncommon where somebody wants to buy ahead of time, right? They found something, they want to buy it before they've sold. So that's called a reverse. So the government gave us a revenue procedure on how to do that. We create holding companies, straw man, third party, whatever you want to call it. Let me just give you an example. Somebody wants to sell something, but they found a nice little warehouse. That's the one I want. They want to buy it ahead of time because they got competition. If they don't close on it, they're going to lose it. So we create a holding company, an LLC. It steps in and buys the new one for the client, and we can hold the title, and that's what it's called, an exchange accommodation title holder. So we'll hold the title for a client for 180 days, and then they sell their property and buy from the holding company. Okay, so it's a straw man, third party, to lock up a new property for a client, waiting for them to sell.
Thank you. Yes.
Yeah, and I don't do those for $750, right? So we're holding property. There's financing involved. There's a bunch of other issues.
There's a lot of risk involved. So
that's the issue, right? You're putting another party on title for a while.
Sure.
So we generally start at about $5,800, depending on where somebody is and what we're doing, what we need to do. That's basically the floor, and then we go up from there, depending on the numbers. What happens? We do a decent amount. We're probably doing 3 and 4 of these a month, reverses, backwards.
Bill, a related question there to what you just described is many of my commercial customers take title in an LLC.
Right.
What do they need to plan for if they're going through a 1031 exchange, if they have title in an LLC and they might take title in the same or a different LLC?
Yeah, good question. Right. So this is about taxes. So the current tax owner that's selling the relinquished property's got to be the same tax owner that owns the new one. So you can't change businesses, right?
Okay.
And so if I own a property in my personal name and I'm selling it that way, that is my social security number. I own it, and it's on my tax return, on my Schedule E, et cetera, et cetera. I can buy the new one with my own little business, a single member LLC if I want to, as long as I'm the sole member. So single member LLCs are disregarded for tax purposes. They don't file tax returns. They stay on my personal return. So those are okay. We see them all the time. The same with a revocable trust. So I could sell as Bill Horan, and Bill Horan, trustee of Bill's revocable trust, could be on title to the new property. Both single member LLCs and trusts, revocable trusts, are also disregarded. We see that all the time. So the key is the underlying tax owner of the property, right?
Oh, thank you. Great explanation.
Mm-hmm. All right, super. Well, Bill, we appreciate you taking the time today.
Sure. Good morning.
Any closing comments at all that you want to remind folks about?
You got to have a QI before you close. Don't call me afterwards. Can't help. I hate that call.
Okay.
And plan. Just just really, really do your homework and plan, right? You got to know your numbers up front. I call it, you got to know your pain numbers. And we had just talked about that, basis and gain.
Mm-hmm.
You know, how much numbers are you talking about? If it's a little number, I mean, your tax number is tiny, don't do it. Just cash out, pay your taxes, and get on, right? If it's a big number, okay, wait a minute. I don't want to give up that much of my money. I'm going to keep my money and go buy something else.
Right.
And keep going. Change the investment, make it better, buy a nice beach house, rent an old beach house, all that kind of stuff. So planning. Know your numbers, plan this thing out.
Mm-hmm. Well, thank you for the help you've given us personally in the past. We've enjoyed
You're welcome.
you on our exchanges, and that's why we wanted to share this information with our clients and let them know that we do not only have a connection for them, we understand the process, and we have done it ourselves personally, so we do know how it works, and we do appreciate everything that you and your team does. You have a great team. Everybody that we've worked with and communicated with through your company has been awesome. So
that's great. It's the way it's supposed to be, right?
Yeah, it's supposed to be professional and seamless. So, and it has been. So thank you so much for being our guest. And I just want to mention that we have a wonderful real estate planning guide that will help you with your numbers and your planning. So if anyone who's watching would like a copy of that, just contact us. We'll be happy to get that to you. We have several different educational resource guides that can help you in all the different phases of your real estate journey in life. So we're here to help you invest and make money ultimately. So definitely give us a call here at the Martin DreamToHOME Team. And thanks again, Bill, for being our guest. I wish you a wonderful weekend, and we'll be in touch hopefully with the next client that's looking for an exchange.
Cool. Thank you very much.
Okay. Great talking to you.
Appreciate it. Appreciate it. See you guys.
Okay, thank you, Bill. Bye-bye.
Bye.